Good to catch up, Francisco. Let's just start with what's going on with aluminium, 3K. What's happening? Is this all supply scarcity?
Indeed, Jonathan. There's supply scarcity on a couple different fronts. We've had, of course, a coup d'etat in Guinea, which has created some anxiety around bauxite supplies. Bauxite is the ingredient into alumina, which in turn is the key ingredient into aluminum or aluminium.
Nice.
We've had shortages there because of the coup, but then more importantly, China has been curbing aluminum supplies now for most of the year because they're trying to rein in power generation, become cleaner. And remember, it's been a low rainfall year in China. It's one of the reasons they've been trying to crack down on Bitcoin too. So thermal generation is very strong, but it's mostly, again, filling the gap for that lack of hydropower. So if you look at aluminum production year to date in China, it's kind of flat as a pancake. Demand's kept growing. We have all this liquidity in the system, and that's what's pushing prices higher.
Mm-hmm. Francisco, I saw the London Metals Index, the Bloomberg indexes as well, show metals as a group doing better. We know the Bloomberg Commodity Index has done better as well. Does it signal a commodities breakout? Can you call a bull market in commodities?
Well, I mean, Tom, we've had a bit of a bull market already for a while since we hit the lows back in April last year. So we remain constructive here. We think prices of commodities, most commodities, will keep going higher. But again, it depends on where you look at. Remember, iron ore has been coming down very hard since Vale started exporting more volumes. But then oil, on the other hand, it's kind of sitting. It's a bit of a boiling frog waiting for the winter. And natural gas, of course, is ripping around the world and also dragging up U.S. nat gas with it. So depends where you look at. But in broad terms, commodities are very strong because we have a lot of liquidity in the system. We are growing. We have supply constraints. We have low inventories. It's kind of a perfect cocktail for commodities to keep ripping higher.
And when you talk about oil in the cold winter, there was a note that I believe your team put out that you do see the potential for $100 per barrel oil in the United States and elsewhere based on what supplies are doing. Just want to bring you these headlines. OPEC sees stronger demand for its crude this year and next. At the same time, non-OPEC output is supposed to be down. This really directly speaks to the shale patch. What's the tipping point at which point we start to see supplies go up to meet the demand and regulate?
Well, so I think right now we have a very short window into the winter. We're all still wearing flip-flops and shorts in the Northern Hemisphere, but that's going to change very quickly. Within a month or two, it's going to get cold. It could get very cold. I think natural gas is going to be very strong. And if it breaks out, and remember, we're already trading over $20 per MMBTU, which is $120 a barrel of oil equivalent in oil, and we go another $10 higher per MMBTU, which would put us at $180 per barrel of oil equivalent. I think that would drag up the entire oil sector because people will look for cheaper sources of BTUs, of calorific value for heating and for power generation. We see a very strong bunker fuel market in Singapore already because of that reason. So I'm a little concerned that the winter gets cold. We're going to see the entire energy complex ripping higher.
Francisco, what does the move in these commodities say about the resurgence of the Pacific Rim?
Well, I mean, I think the Pacific Rim is definitely coming back. Now, the one thing I would note is that China is a little softer. And remember, one thing we've been tracking with a lot of interest is what's going on in the property sector in China with Evergrande's bonds coming down very hard. Chinese new loan issuance also slowing down materially over the last few months. And that's one thing that we keep a close eye on. But generally, the Asia-Pacific Rim, the PAC Rim, as you put it, it's definitely coming back with force. And remember, over the next 6 months, we're going to have a huge surge in vaccinations, which will restart air travel. So we think $100 oil is more likely next summer when we all start flying internationally much more in a much greater way. Otherwise, it may happen sooner if the winter turns very cold. But the PAC Rim is definitely coming back.
But it's a triple-digit crude price, the base case for you, Francisco. Is that your base case now?
We have a call for $100 oil for next summer. What we are saying is if the winter's cold, we could roll that up 6 months, and it may happen this winter.
Wow.
But again, we're in a tight market for energy, and oil is still benefiting from OPEC excess capacity, but we don't have the amount of shale available over a short window of time to meet that call if the weather gets cold.